Welcome to the stock analysis of PNB Housing Finance Ltd. Today, we're diving deep into this leading player in the Indian housing finance industry. We'll cover their business segments, financials, management outlook, and key strengths and weaknesses. Ready to learn more? Let's get started. Before we begin, a quick introduction to PA Wealth. We're an investment services group offering stocks, PMS, mutual funds, alternative investment funds, insurance, and startup investments. We upload research videos on different companies, mutual funds, and financial topics every week. Subscribe to our channel and hit the bell icon to stay updated on the latest market trends and potential multi-bagger stocks. Now, let's start with an overview of PNB Housing Finance Ltd. PNB Housing Finance Ltd was incorporated on the 11th of November 1988. The company is primarily engaged in the business of providing loans to individuals and corporate bodies for purchase, construction, repair and upgradation of houses. It also provides loans for commercial space, loan against property and loan for purchase of residential plots. The company is deposit-taking housing finance company registered with National Housing Bank, NHB, under Section 29A of the National Housing Bank Act, 1987. It is promoted by the Punjab National Bank. Now, let's take a look at the Indian housing finance industry. Driven by the real estate sector, India's home loan market is expected to fare better in financial year 2024, with an anticipated 12% to 14% growth in the on-book portfolio. Housing finance company portfolio experienced a slightly higher growth of 18% year-on-year, against 16% growth in scheduled commercial banks' housing portfolio. Housing credit increased at a CAGR of approximately 14% from March 2019 to December 2023. Let's break down the business segments. First, retail loans. The retail loan book comprises the prime segment and affordable segment, termed Roshni. The company at the start of financial year 2025 carved out emerging market segment from prime segment. The company offers home loans tailored to the budgets of their customers, including loans for home purchases, renovations, improvements, construction, self-construction, and extension. Aligned with the central government's mission of housing for all, the affordable segment was launched under the brand Roshni to fulfill every individual's aspiration of owning a home. Second, corporate loans. The focus during the year was to reduce the corporate book and resolve the delinquent accounts. The construction finance loan book registered a decline by 46% to 2,052 crore rupees as on the 31st of March 2024. The decline in the book was on account of book rundown, arc sale, write-off etc. The book is now 3% of the total loan asset, spread across 12 developers. Let's now break down the PNB Housing Finance loan book for the financial year 2024. The retail loan segment is the largest contributor, making up 97.27% of the total loan book. To break it down further to the subsegments of retail loans, the prime business account for 75.88%, emerging business account for 17.87%, affordable business account for 3.52%. Lastly, corporate loan segment make up the rest 2.73% of the loan book. Now, let's take a look at the operational network of the bank. The company have more than 14,000 channel partners across the country. The affordable segment, Roshni, has dedicated branches, manpower and channel network across select cities to drive the business. During the year, the company expanded their retail branches for both Prime and Roshni segment. While they added 78 branches in Roshni segment, their reach in the Prime segment bolstered by adding 33 new branches during the year. Now, let's look at the management of PNB Housing Finance. Mr. Girish Kosgi is the Managing Director and Chief Executive Officer of the company. He has over 26 years of experience in the financial services sector. He holds an Executive Master's Diploma in Business Administration from the Indian Institute of Commerce and Trade. Mr. Dilip Kumar Jain has over 28 years of experience in various fields in the banking industry. He carries with him several years of banking experience in various senior positions at Punjab National Bank. He is currently the CFO of Punjab National Bank in the rank of Chief General Manager. He is a member of the Institute of Chartered Accountants of India since 1989. Mr. Kapil Modi is a Managing Director and Partner at Carlyle India Advisors Private Limited and is part of the investment team of Carlyle India for over 16 years. He holds a B.Tech degree in Computer Science from IIT Kharagpur and is a postgraduate in Management from IIM Ahmedabad. He also holds CFA from CFA Institute and a Master's degree in Business Law from National Law School, Bengaluru. Let's now look at the shareholding of PNB Housing Finance as of June 2024. Public holds the highest share of the bank, 43.04%. Promoters hold 28.13%. Mutual funds hold 5.86%. Foreign institutional investors hold 17.89%. Other institutions collectively hold 5.08%. Let's now review the PNB Housing Finance financial performance over the years. The company's revenue has grown at a CAGR of 14.70% over the past 10 years from 1,780 crore rupees in financial year 2015 to 7,014 crore rupees in financial year 2024. The company's PAT has grown from 194 crore rupees in financial year 2015 to 1,527 crore rupees in financial year 2024 at a CAGR of 22.91%. And the net interest income has grown from 1,265 crore rupees in financial year 2015 to 4,264 crore rupees in financial year 2024 at a CAGR of 12.92%. Furthermore, the company's ROE has decreased from 12.30% in financial year 2015 to 10.20% in financial year 2024. Let's now turn to the management commentaries to get a better understanding of the company's performance. The company sanctioned 88,465 loan applications, an increase of 23% year-on-year. The focus of the financial year 2024 was on building the retail business. Retail assets grew by 14.1% year-on-year as on financial year 2024. The retail loan assets now stand at 97% of the total loan assets. Operational expenses grew by 26.7% year-on-year, driven primarily by investment in affordable business, driven by expansion, strengthening employee base, and technological upgradation. In Q1, PAT stood at 433 crore rupees, registering a growth of 25% year-on-year, maintained net interest margin of 3.65% during the quarter. The company had guided a threshold of 3.5% net interest margin. This year, the company has opened 40 new affordable segment branches and is planning to open 40 to 50 new branches for the next 3 to 5 years. It is expected that it will take 9 to 10 months for the branch to achieve break-even. Cost of borrowing has improved from 7.98% in previous quarter to 7.92%. Further post-credit rating upgrade, the incremental cost of borrowing at the end of Q1 has come down to 7.75% versus 7.93% in Q4 of financial year 2024. According to the company, retail segment is expected to grow 17% year-on-year, whereas the disbursements and loan book are expected to grow at 19% and 14.4% respectively. NPAs and restructured assets. The gross NPA reduced by 241 bits per second year-on-year to 1.35% as on the 30th of June 2024. The company continued to work towards achieving 1% NPA by this year end. In terms of disposal of repossessed properties, the company successfully sold off 98 properties in the Q1 through auction channel, recovering complete principal outstanding in these accounts without incurring any loss. During the quarter, PNB Housing Finance recovered around 80 crores from total written-off pool, both corporate and retail. Close to 28 crore rupees in retail was collected in Q1 of financial year 2025 from the technically written-off pool, which is more than 40% of their total recoveries in the last financial year. The company has a written-off pool of around 1,250 crore rupees in corporate and 500 crore rupees in retail. They expect to continue recovery from written-off pools every quarter. Now, let's discuss the strengths and weaknesses of the company. First, strengths. Improvement in asset quality. There has been a significant reduction in the company's credit costs due to a reduction in headline gross NPAs, which declined to 1.35% at Q1 of financial year 2025. There has been an improvement in its retail NPAs as well as corporate NPAs. The steep reduction in corporate gross NPAs was due to the sale to ARCs and write-offs. Diversified resource profile. PNB Housing Finance is one of the largest players in the housing finance space with an asset under management of 725 billion rupees at Q1 of financial year 2025 and more than 3 decades of operational track record. It has witnessed multiple business cycles and has a pan-India presence with 303 branches. Now, weaknesses: low-ticket granular mortgage portfolio to be monitored. PNB Housing Finance has been able to raise funding at competitive rates from the bond market and banks. It was in a favorable position to negotiate spreads with banks after the equity infusion. The company has started expanding in emerging market loans and affordable housing segment, which provide a positive impact to the yields. However, these are operating cost-heavy segments and can lead to higher credit cost. And that wraps up today's analysis. If you found this video insightful, give it a thumbs up and subscribe for more research-based financial content. Don't forget to click the bell icon for alerts on potential multi-bagger stocks. Got a topic you want us to cover? Drop it in the comments below. Thanks for watching, and we'll see you in the next video.